This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, and welcome back to Invest Like a Pro. So today I want to spend a few minutes discussing your log file, your trading plan, and most importantly, the difference between a good trade and a winning trade. And what I think most people that wouldn't make sense to, but if you think about it, if you have a plan and you have the patience to wait for your plan to come through, in other words, have a stock that meets the criteria in your plan, and you follow that plan, you follow the process on your plan, you go through the trading management, you enter when it says that you should enter, that all that should be in your trading plan, and you still lose money, that's still a good trade. Okay, so there's a big difference between putting on a trade and having a win and that actually being a good trade. So let me just show you what I'm talking about and give you an example. Let's just look at this steel dynamics. We'll start with the weekly chart. And we've got a pullback here taking place with rising moving averages and strong ADX in place. Okay, so I've got strong move to the upside and then a pullback. And it even turns into an undercut and rally, but let's not even look at that. Let's just look at this pullback and look at it as a 2 time frame pullback play. All right, so if I go to the daily chart, you can see that I'm going to take this off now. So when this went down and we had the 18 below the 40 and price was below both, we basically had a trigger in place. And what I always talk about is going inside the zone and then coming out. And then you can see what happens. It went in and came out and tested this low and didn't go to a new low. So typically I'm looking to be ready to be a buyer. We had MACD crossover. We had low ADX on this time frame. So strong ADX on the higher time frame. We had a strong ADX on the up reading. And then during the decline phase, low ADX. So that tells me that I'm willing to go ahead and take a close of the 40 is an operative signal. Now, you could actually be even more aggressive than that if you want to be, but that would be the signal that I would be looking for in this situation. And what happened is it promptly went down and stopped me out. Now, that was an earnings release that caused that. And so, I think you have to take that into account that when you have earnings, you got to be very careful. I've been talking about that a lot. I tend not to take trades when there's earnings coming, but let's just for the sake of this video, let's just assume that wasn't earnings and it just dropped based on whatever, market or whatever. And so I put on a good trade. I followed my plan. It met all the criteria that I'm looking for and I lost money. Hey, that is a part of trading. And if you think that you're going to be able to go 100% with your wins and be right every single time, even when you follow your plan 100%, then you should go do something else because that's just not going to happen. You're always playing percentages, and a big part of making money is making more when you win and losing smaller amounts when you're wrong. And if you continue to follow your plan like this and you get in and then you take the loss when it comes down like that, then I think you're going to be successful over time. You do have to take what's going on in the market into account. I mean, that is going to play a role. In other words, there are going to be times where you can do everything right and the market's not in, it's not in a really strong position. And so you'll take a few more losses during that period. And then there'll be other times where you'll do everything right and the market will be in a really good condition and you'll take win after win after win. So it's not the type of thing where if your win rate is 60%, it doesn't mean that it's going to be always consistent like that. You'll go through periods where you have pretty long losing streaks depending on the market, and then you go through periods where you just have massive long winning streaks. And you want to keep that in mind. It's very difficult part of the psychology of trading. So to me, that's actually a good trade. And what I want you to put in your log sheet is a new column. And on that column, I want you to say whether it was a yes trade or a no trade. A yes trade is when you put on a trade that meets all the criteria in your trading plan. If you have that in place and you put on the trade, whether you made money or not, then you call it a yes trade. Okay, so what I want to see, or what you need to see, is when you take your losing trades how many of those are no trades? How many times are you just kind of flying off the handle, not following your pattern, your process, not following your plan, putting on a trade, maybe jumping the gun on the trigger, maybe ignoring a few things that you have in your criteria, and maybe the ADX isn't that strong and you're still playing it, or maybe the ADX was really strong on the pullback and you decide to play it anyway. Things like that, you want to say, okay, I put on the trade even though it didn't meet my criteria. That's a no trade. Now you might win on some of those, but what it's doing is it's incorporating bad habits. You're going to end up putting yourself in a position where you're in the back of your mind, your subconscious mind is going to start saying, I made money. I skipped the last time. I skipped following my plan the last time and I made money. Why don't I do it again? If you start doing that consistently, then I can almost guarantee you that over time, over the course of 100 trades, 200 trades, you're not going to be consistent. You're going to have long periods of where your numbers just don't meet up with what you planned based on the plan. So what I would consider to be a bad trade would be, getting long here on this same bar. And then as the stock's coming down, or say earnings is coming, you say, you know what? I'm going to pull my stop. I had a stop down here, but I'm just going to go ahead and pull the stop because I don't want to get stopped out based on earnings. So, you're putting yourself in a pretty significant risk doing that. But in this case, it actually worked in your favor because after 4, 5, 6 days, you're back at a profit and you end up taking a profit either on this day or this day. So you buy it here, you sell it here. On your spreadsheet, on your log file, it's showing a winning trade. Okay, it says, that you won on this. And, you're going to forget. So you need to put this stuff down, right? Have in the column, say that was a no trade. And you might even take a note and say, pulled my stop. Okay. And see how many times when you pull your stop, because it only takes one time where you pull your stop and it just keeps going to wreck your performance, and actually not only wreck your performance, but maybe blow up your account. And that's the big thing. I can tell you within 3 years of starting back in the early 1990s when I was trading, I did an options trade in Microsoft. I did a huge amount of the options and I ignored my stop and they went off worthless. They went out worthless. I ended up losing a massive portion of my account, basically blew up my account. And so, the reason why I think I'm pretty good at teaching this stuff is because I've done everything wrong over the years. I know the mentality, and sometimes you're going to fight yourself. And this is one big thing that you're going to need to get over. And that is sometimes you put on the perfect trade, you follow your plan, and it's really, and it ends up just being a losing trade. It's a part of life if you're going to be a trader, and it's still a good trade. So I want to make sure you have that in your mind. Now, let's just say you didn't put on this trade here and it came down and dropped because the earnings were coming, and then it dropped down and then turned up. So make sure you know what your next entry is. So if you miss the first entry, this is just a little add-on to what we're discussing here. I want to make sure you know that once you've missed the first entry, and you're saying to yourself, okay, I didn't get perfect entry, and let's say this actually goes up a couple more days, then you have to figure out what is your next trigger. There's usually 3 or 4 triggers, and in this case, it dropped down and came back up and gave you a pinch play right at the moving average. Look at the pinch, crossing over after breaking the downtrend line like this. So, that would have been an optimum next trade. Now, let's say that you put on this trade and do it here and you make money. That's a good trade. It's a winning trade and it's a yes trade. You put that in your file. But let's just say you miss that and you decide, you see it up here and you say, you know what? I missed the perfect entry, but I'm going to go ahead and buy. Well, yeah, you could buy it here and sell it here 2 days later, and that's a winning trade. but it's a no trade. I just want to make sure you understand the difference between the two, and I want you to get really refined in your log file. Make sure you're putting in whether it's a yes or no trade, and if it is a no trade, if you have a consistent amount of no trades in there, then you have to figure out from a psychology standpoint what is preventing you from following your plan. Your plan has some criteria in it that doesn't fit with your personality. Okay, that is incredibly important. I should have probably said this earlier. Hopefully people are still listening on this video, because I know it's getting late in this video. I usually do about 10 minutes, but you have to recognize that if you're taking a lot of no trades, then it has to do with your psychology. The psychology is not fitting in with your plan. And you have to figure out what in your plan doesn't fit with your personality. Okay, so anyway, post any questions or comments, and we'll see you next time.